So I'm Michael Lewin, Director of Touro's Land Use Law Institute, and this is our first video podcast of the year. So Jennifer, would you like to introduce yourself and our guest?
Sure. My name is Jennifer Casey. I chair the Touro Land Institute and also chair the Suffolk County Planning Commission. And I'm an attorney in private practice. And welcome to our guest today, Kevin Erdmann, who's written some interesting books about housing. Kevin, if you want to tell us more about the books that you've recently written, I was reading about them. They look really, I haven't read them yet, but they look fascinating.
Yeah, I have two books. They started as one manuscript, and we realized it was sort of too much to put into one book. So Shut Out is the first book, and but both of the books basically are about how a lack of housing supply has been the main problem in housing markets, and misunderstanding it. High costs as sort of a product of demand factors has been just an ongoing mistake. And so, the biggest mistake was the recession in 2008 and policy being sort of all toward assuming there were too many homes and too much sort of froth in the marketplace, and then cutting down on the supply of housing when we already sort of had a supply problem. So Shut Out is sort of the background of that, sort of the microeconomic story about all the things that not having enough housing does to an economy. And then Building from the Ground Up is sort of the macroeconomic version of it. And it's sort of just a timeline of the market since the turn of the century, and sort of the policy decisions that were made, and how those led to a financial crisis, and how that's led to a continuation of high housing costs. So in Building from the Ground Up, I sort of just, look month to month, year to year. Here's what the Fed did. Here's what regulators did. Here's why they did it. Here's why it led to more problems. And yeah.
Excellent. So what do people get wrong about the causes of rising housing costs?
I think it's sort of a fast twitch versus low twitch information problem that, housing is cyclical, has a lot of cyclical elements. And so in any context over time, you're going to have, the average house costs $200,000. You're going to have a year where it bumps up to $225,000, and then it's going to go down to $175,000. And so over time, if the average house should cost $200,000, you've got these constant changes that are sort of fast twitch business cycle changes. They go up to 225. Oh, there's a speculative fervor. It goes down to 175. Oh, there's a recession. It goes back up to 225. Oh, that's, interest rate decisions and so the problem is when there's an underlying supply problem, it sort of just takes that mean that we keep sort of reverting around, and it sort of puts an upward slope on it. So you still have these cycles around it. But what happens in real time as we're all watching this and we're all reacting to fast twitch information, now prices go up to 250, and we say, oh gosh, this is an especially bad cycle, right? We let things get out of hand, and then the cycle reverts and it only goes back to 2000, and that was a very shallow recession. We didn't do enough to sort of get back to normal. And then the next time it goes up to 300,000, and it's like, wow, these cycles are getting really bad. It must be that we're holding interest rates too low and we're giving too many subsidies to housing, and just then the next downturn, it only goes to 250. It doesn't even get back to what we think is normal. And then it goes up to, basically where we are today is it's up to $400,000 a house, and there's no possible cyclical, policy decisions we could make to get it to 200,000 cyclically or through demand suppression. And so we're sort of at this point where it's sort of a moment of truth. Like you have to give up the demand side explanations for why prices are this high. And so it's just going to keep going like this until we solve the supply problem.
What I find is interesting, just from my own observation. I live on Long Island, and and I live in Huntington, Long Island, and all of a sudden the prices are ridiculous. You know, a neighbor of mine had their house listed. It went for like 100 over asking. There's no supply right now in our area at all. On the flip side, my mom and my stepdad were living in Florida and decided they wanted to get out of Florida because for a bunch of reasons, health reasons, heat, all these other things. And, you know, last winter, the condos in their complex, the prices were really high. They had a buyer, something fell through, and now the prices have dropped like 200 grand since last winter. And there are so many condos in their complex in the market. I understand it to be that there's a lot of issues in Florida generally because of condos and all these fees that are coming out because of what happened with the collapse of a condo a bunch of years ago. But also, do you see, and I'm just asking you because you're more of an expert than I am, and for me, I'm like, wait a minute, is it just less, there's just less people wanting to move to Florida? People are scared about what's going to happen between weather and because of these extra HOAs that are going to be added on the condos. Is that also another different influence that affects these housing markets as well?
Yeah, I mean, I think specifically in Florida, you know, I think you've outlined that very well, and I'm not sure I have any expertise.
I'm not an expert, but I just thought I'd ask you.
Yeah, I mean, I'm not an expert on the sort of you know, specifics of what's happening in Florida,
Yeah.
but all that is definitely weighing down prices in Florida today. But again, I think that is, you know, all those are sort of things that are always in effect in the housing market, that either, you know, some of those things are cyclical, some of them are localized reasons why prices go up and down. You know, the economy, local economy is good or bad, or like, you know, Florida has all these just odd costs that have come up over the last couple of years. And again, I think, you know, it's natural for us, but because those sort of fast twitch things are noticeable and are what are in the newspapers, right? The newspapers aren't publishing stories about how, you know, local land use rules make it hard to build new apartment buildings in Miami or whatever. And so, I mean, there are those stories, but it's not, right? It's not as sort of palpable to us as we're seeing, you know, hurricanes.
Yeah, and I've just heard from local realtors down there that people want to buy homes down there, but nobody wants to buy condos. So it's interesting how those kind of things, those cyclical, at one point people wanted to be in condos because they didn't want to deal with having to deal with a house and the property and all that other stuff. So it's interesting just seeing how those different types of cycles kind of occur in different areas of the country.
Yeah.
So let's go back to some of the stuff about your expertise. So what really happened in the housing bubble before the Great Recession?
Yeah, well, I think it's interesting that you bring up the Florida dynamic and that your parents are there, because I think that, you know, those interregional connections are a big part of what happened. So, you know, New York and Boston and LA and San Francisco just have an endemic, you know, their housing supply curve is basically vertical. They just have an endemic shortage of housing. They limit housing locally so severely now that they really can't even just grow at a normal, like, births and death rate of city growth. And so prices in those cities were going up before 2000 because they didn't have enough houses. And there was literally like a refugee event of like families moving out of those cities, especially families with really low incomes, because rents and prices were all going up and continue to go up. And so then there's this secondary effect. And so most of the migration from the Northeast goes to Florida, just on net, which is a little odd, but it's just what it is. And then the migration from California is sort of more easy to intuit. It goes to Arizona and Portland and Seattle.
Texas, right? A lot of people move to Austin.
Yeah. That's been more. There wasn't as much. Texas somehow avoided all this in 2000, in the years going up to 2000.
But more recently, it's become very popular.
Definitely, yeah. I mean, Austin has been really is the.
And even Dallas, I heard you can't. The traffic there is just unbelievable. You can't even move.
Yeah. And so, you know, in the pre-2008 period, those are the places that we associate with a bubble, a housing bubble. But it was this those places really don't actually have the signature that people tend to associate with a credit boom. It wasn't like in Phoenix, it wasn't the cheap houses in marginal neighborhoods where families with marginal credit would be buying into that went up. The whole city's values went up, just like Austin and the Texas cities in general. In this recent boom, prices across those cities have gone up because people were moving in. That's sort of how a true demand side bubble operates, is all the house values go up, and that's sort of how you can tell when it's going to be unsustainable, because that's where the market's sort of getting ahead of itself, and it's usually a migration issue that's doing that. A lot of people wanting to move in, and so you get the true sort of bubble outcome where the long-term supply might be elastic, but the short-term supply is a little slow. And so you get this temporary boom. And so that happens in Florida and Arizona and Nevada. But what caused that bubble was this influx of refugees from the places that didn't have enough housing. So really, that entire boom is a supply shortage problem, first in the cities where it's just always a shortage, and then in the cities that suddenly had demand increase just faster than short-term supply could keep up. And so prices went up temporarily there because of its supply and demand mismatch. But the cities that were the cause of all of it, New York and Boston and LA and San Francisco, just never have enough housing. And so we basically just had what's happened now is like migration has become very cyclical, and that when we're better off, when the economy is growing, people want more of everything, and housing is one of those things that they want more of. In the cities where housing can't grow, they necessarily have to depopulate. And in fact, we're seeing that now in New York City and Boston and LA and San Francisco. Their populations have been declining really since before COVID. And so now we have this weird counter-cyclical population and migration pattern where the better off we are, the more people have to compromise out of stagnant cities into places where they can build houses for them. So that's basically.
Well, I almost see, and I don't read, and I don't know all the trends with New York City. I deal with a lot of more local stuff on Long Island, but I see more people that I know. I know after COVID, a lot of people left New York City, got housing other places. But I do see a lot of young people now wanting to move back to the cities, because I think a lot of them were very isolated, whether they were in college or just out of college and were living at home. But now they have this desire to live with other people their age and be in an office space, because they were so isolated. For some of us of a certain age, we relish working from home and never want to be in an office again. But for those of us that didn't spend 30 years doing that, really need that sense of community and being around other people and being able to interface. And do you think that there's going to be a pendulum swing again? I just from people, friends and family and other people hearing about young people wanting to live in cities now again. And even I have a daughter who's a senior in high school. She wants to go to college in New York City, because she's been going to a boarding school up in New Hampshire for the past 4 years. And she goes, I want to be in a city. I've done my liberal arts education in the middle of nowhere. So I'm just curious of what you've seen with young people and a possible, and what also I see the other pendulum of older people retiring and wanting to be in cities, because it's much easier, I think, for older people who don't want to drive any longer to be in a metropolitan area, as opposed to having to take care of a home and being someplace that's maybe more of a cultural desert once their children are gone and there's not as much need for them to be in these smaller towns and suburbs.
Yeah. It's an interesting question. And in fact, at my Substack, I run a very simple model on that sort of can disaggregate it within each city, like what portion of home costs are due to supply constraints, what portion are due to credit access, what portion is due to cyclical changes. And I've never really controlled for density, because in most cities in America, density doesn't matter, because the cities weren't built to give density value. And the New York City is unique in the United States, and Chicago, of course, for actually being built in the predating the zoning constraints we put in. So New York City actually does have this interesting value that comes from density that actually is mostly is actually an inferior good. It's mostly the poorest residents that value the amenities that are associated with density. And San Francisco has a little bit of that. And so in my model where I can disaggregate all these things, when I do control for density, you can really see it when COVID hits that the value of density went like, collapsed. Like literally within these metropolitan areas, so a lot of those moves you're talking about, maybe moves, some of them might be moves to other cities, some of them are moves from the dense zip codes to the less dense zip codes, right? And it seems as though that's flattened out. In my data, I haven't seen much evidence of it reverting, of density, like sort of regaining back that value. I think there's, obviously potential for that. And it'll be interesting to watch it moving forward to see if this is sort of a permanent,
I think even older people, like people that I know that got places outside of the city during COVID, a lot of them still kept a place in the city and balance their time, might spend some time out of the city. But I think with older people that they have that flexibility with their work now, that they spend time in cities, but they can also spend some of their work time outside of cities. So are able to maintain two residences. Not everybody has that ability to do that. And I've also heard of people that moved out to suburbs that are moving back to the cities because now that it's over, they're missing the city. But it goes both ways. I mean, I see, since I was in my 20s till now, a lot more families staying in the cities because it's much easier to raise a child in the city than it used to be for a lot of families. There's a lot of benefits to raising children in the city than people thought there could be. There's also, I think, what's interesting in New York is not because of COVID that there's not as much need for commercial properties in some areas. That there, even before COVID, there was a lot of conversions of office building space to residential space, and that has continued. So I think that changes the whole density model as well, using buildings for different purposes. Which is an interesting concept as well. I'm sure that might affect some of your theories about density, the conversion of buildings.
Yeah. Actually, there's a really interesting aspect of this. That one of the things that I think confuses economists in general on this issue, and is just hard to sort of differentiate, is that there's this idea of like superstar cities and agglomeration value of like cities provide value by bringing, lots of talented people together that can network and everything. And there's clear truth to that. But what I think has happened is that in the last 20 years to half a century, our main problem has been cities that have put a cap on growth. And so costs have gone up basically because of like an oligopoly, control of the land. That's for prices to be pushed up, there has to be some underlying value. But it's not that the cities have gotten, it's not that these cities have become more superstars or have more agglomeration value than they used to. It's that they, it's more like an OPEC of housing, right? So both of those things can drive up prices, and one is for good reasons and one is for bad reasons. And like on this density thing, it's sort of interesting because, for a long time, those dense neighborhoods that would have been, you see gentrification happening, which is basically in every city where there's not enough housing, people with lower incomes are being forced out in one way or the other, or they're not sort of moving into the aging neighborhoods like they normally would in a functional housing market. But where it's in a place like New York City, you can see these things happening in a very distinct localized event of like a sort of a neighborhood turning over and sort of upgrading, because something about it brings in people with more income and then of course the locals get upset about it because the long-term residents feel themselves sort of losing their neighborhood because the costs get out of reach on them, right? And so you get these weird sort of reactions that are really born out of the supply problem because people feel like their only way to sort of keep their hold on being a resident of New York City is to sort of, for New York City to keep neighborhoods that have low amenity value, right? And you get these weird reactions of people actually wanting the neighborhood to sort of stay bad, right? Like even sort of wishing that, you know, the crime it doesn't get reduced, or that.
And I don't know if there's any of those anymore. I mean, even in areas of the Bronx now, I mean, the stuff that's gone on in the Bronx now with this high-end housing by the water is just unbelievable. And Long Island City, I have to tell you, living on Long Island, I hate to admit, but I usually drive back and forth. It's just a lot easier for me than relying on the train sometimes. But Long Island City, it's unbelievable the amount of construction that's gone on in the past couple of years of these high-rise buildings. First it was Brooklyn, now Long Island City. You know, every time I drive in, it could just be a week, and the landscape changes every time I'm driving in with more buildings going up. And it's amazing the density that has occurred, not in Manhattan, just only Manhattan, but in the boroughs that surround it. It's incredible the amount of construction that's going on.
Although, you know, I'd push back on that because at the metro area level, I mean, the New York City never even these days approaches a sustainable level of. So I think you're used to living in a city that's so tied
I'm just
down.
saying what I see when I drive. I see more buildings going up.
I think to agree with both of you, basically the places that have changed the most are the ones that are like most noticeable. In other words, if you're driving from Long Island or to even taking the train, probably from Long Island to Manhattan, probably the places you're going to notice the most are the ones that have changed most recently, like Long Island City, as opposed to places like, I'm just trying to, you know, outer Queens that look just like they did in 1962. And you're not going to pay as much attention to them.
Yeah, that's a good point. Yeah. But you know, on my point on the gentrification and everything, what I think has happened with COVID is, you know, there's this natural sort of conflict there when a city is short of housing. You know, the existing residents, you know, have to keep getting priced out. It's inevitable, you know, when they're not building a sustainable amount. And so you get these weird sort of, you know, like grasping on sort of keeping the amenities bad to keep your neighborhood cheap enough to stay. And COVID sort of created this natural effect of that, of sort of reducing the amenity value for a lot of high-income workers, and sort of naturally removed a lot of that pressure. And so, in fact, it took me a while to really come to terms with it, that it looked like New York City affordability was actually getting better. But of course, that wasn't confirmed with, they're not building ample supply. So it was a disconnect. And then I realized, oh, when you control for this odd situation where the amenity value of density has been decreased because of the pandemic, then actually it's just that it's not that they've fixed the supply portion of that cost inflation. It's just that the amenity portion of it sort of sort of brought prices down for a different you know, unfortunate reason. And so eventually I think that, you know, the amenity value is going to either stay or you know, stop declining or start going back up. And then we're going to see the supply issue keeping, you know, costs high, just like it has been.
So speaking of demand, I want to talk about, kind of raise an alternative explanation in your criticism of it. So one scapegoat for the housing crisis is, well, you have these big hedge funds or institutional investors running around buying houses and sort of driving up demand. And I know you've criticized that argument, so I want to hear more about your response to that.
Yeah, you know, I think it goes back to the mistaken explanations for the pre-2008 boom. So the way, you know, so we basically have always had a supply problem. Before 2008, we got these very regional, you know, market booms and busts that were related to the migration and everything that was created by that. And we solved the cost problem by basically removing, I would say maybe 20 million families have lost access to mortgage funding compared to any pre-2008 mortgage market, ignoring the subprime boom and everything else. Just people that could have gone to FHA or Fannie and Freddie anytime before 2008. There's probably 20 million families that can't get mortgages through those institutions today. And nobody, that policy choice was seen as a correction, like, you know, because of this fast twitch, slow twitch stuff that I talked about at the beginning. That was seen as like a part of a correction to get prices back to what we thought was normal, but actually it's been a devastating change to mortgage access. And you can actually see the effects of it in prices when you look carefully. Nobody in economics, as far as I can tell, even controls for this, even though it's just a multi-sigma change. You know, the average credit score on an approved mortgage between 2007 and 2009 was like, you know, it's like a 40-point jump, and it had been, you know, 710 or so for years or decades. Then it goes to 750, 760, and it's still there. And so any analysis of the market since then is an analysis of a market where we're not in equilibrium. Like, we just pulled the rug out from everything, sort of like seeing a forest where hunter-gatherers have had a pandemic and they used to control the forest, and now everything's overgrown. And then you go to the forest and say, oh, this is what it looks like when hunter-gatherers live here. No, this is what it looks like when the population has been decimated, right? We decimated the home buyer market. And so somebody has to own homes, right? They don't just float out there in the ether, right? And so basically the market collapsed until somebody came in to fill that gap. And eventually the only source of capital that has the scale to replace 20 million capital constrained households is, you know, Wall Street and, you know, private equity firms that have enough capital to buy a lot of houses. So you know, those markets got decimated. We didn't destroy the demand for shelter. So the only thing that could happen after that all bottomed out in about 2012 was rents now would have to rise at an unprecedented level, because we've decimated the sort of the capital structure that would draw in capital for new housing.
In other words, people who would be for sale, buying for sale housing, are forced into the rental market, which drives up rents.
I mean, you can look at it that way. I think it's easier for me to just think about the market as a whole, to think about homeowners as being both a renter and an owner. And so really, they're still renters. They were always renters, but now they're not owners, right? So so basically we suppressed the price to rent ratio because we took away the demand for that would keep prices higher, but we didn't do anything to affect the demand for shelter, which, whether they own the house or rent it, they're taking up a unit of shelter in the city. So basically, you know, if prices are here and rents are here, and the way you get new housing is for prices to be high enough that an existing house costs more than a new house, then what we did is we suppressed the price to rent ratio. So now the price isn't high enough to build new houses. And the only way for that to correct is for it to go like this, and which is where we are today, where prices are finally back to where we're starting to see some low tier new home building, but it's at rent levels that are in the low tier parts of cities are like 40% higher than they used to be. Because that's how much, actually, before the mortgage crackdown, there was never an institutional market of you know, build to rent market or institutional landlords in single family homes of any size, because families with mortgages naturally outbid corporations for housing. There's just so many benefits to being a homeowner. So when we took that away, the price point that brings in big capital is lower than the price point for homeowners, and so it suppressed, and then everything had to go up until now it's finally high enough that now those institutions are building whole neighborhoods of new housing. And again, people, you know, we did this to prices, and then the hedge funds came in because somebody had to buy the houses. And then after they came in, everything went like this. And so everyone goes, oh, look, the hedge funds made rents and prices go up, right? Well, actually, they were just bringing the market back to equilibrium after we collapsed it. Now, nobody accounts for the collapse because they thought that was going back to normal. And And so it's really, people were doing equilibrium analysis on this when really it was a market in disequilibrium that had to go back to equilibrium somehow. And private equity in Wall Street is the only source of capital that could be associated with that, because we made it illegal for everybody else to do it. So now then you get this thing where we're getting these new build to rent neighborhoods. And that's the thing I'm most afraid of today, is now all the marginal growth in home building is going to be renter purchase or landlord purchase single family homes in whole neighborhoods from the home builders. We need millions of homes, and all the marginal growth for now is going to have to be in that subset of the market, which shouldn't exist and never existed before. And it only exists because every other form of marginal new housing is illegal. And so the problem is people are going to get upset about that and say, oh, the hedge funds are buying up all the new homes so that families can't get them. We need to ban that. And that's literally the last thing. Like, once we ban that, there is no other form of new housing that I see that could replace it. So we basically spent decades banning every little subset of housing on the margin. And now there's one left, and I assume we'll be banning it in short order.
You mentioned mortgage suppression. So how did that happen? Was this a matter of like FNMA or somebody like that creating regulations? What were the mechanics of us going from easy mortgages for low-income families in 2007 to no mortgages for low-income families in 2010?
It's a very hard question to answer, because there's basically 100 straws on the camel's back. And, the first thing that happened is they tightened up, some regulations on the subprime market, which was probably fine in and of itself. And so, the subprime market really just, it was all the marginal growth. It was taking up all the new market share from like late 2003 to the end of 2006. And then suddenly it just dropped to nothing over the course of the first half of 2007. Some of that was probably the new regulations they put in to sort of limit, the spreads you could do on new mortgages and force certain underwritings standards that had become loose. Or maybe it sort of collapsed of its own weight. I don't know. I think if that collapse had happened and had been the only thing that happened, things would have been more or less fine. In fact, people sort of like that there's a Ben Bernanke quote in 2007 where he says, oh, everything's fine, the subprime collapse won't affect the rest of the market. I think he was actually right. And he and all the other policymakers just made a bunch of mistakes after that made it look like he wasn't right. So then over the course of 2008, there's just a lot of strong arming from Hank Paulson at the Treasury. You can read their memoirs, and they're bragging about strong arming because everyone's operating on this false premise of what had happened. And so there's there are some regulatory, things passed about, Truth in Lending Act sort of changes and, how to do underwriting and stuff. But I think there was a lot of just sort of qualitative changes in how the regulators were treating them over that course of time. And because it's really over the course of 2008 that all that tightening happens. Any measure of the credit quality of borrowers, the changes from like the fourth quarter of 2007 to the early 2009, it all happens there. Now, eventually that all gets codified in, the Consumer Finance Protection Bureau and Dodd-Frank and everything else sort of then permanently sets it in place. But it definitely happens over the course of 2008. And it's 100 different things. How big of a spread can you charge? 100 new boxes you have to check when you do the underwriting that leave no discretion for a local banker to just say, oh, we know this is a good customer we've had for a while, and we trust that they're and so it's like you can't point to, oh, here's the rule they passed that made it all go away, right? But you can just see it's so sharp, the change. I've seen it reported that the average credit score on a denied mortgage in 2009 and 10 was higher than the average credit score on an approved mortgage before 2008.
Wow.
I mean, that's how that, and you know, eventually you get to a market where people that aren't going to get a mortgage know they're not going to get a mortgage, and so the denial rates stop being informative after a while. But yeah, it over the course of 2008. There's 40 or 50 point rise in the average credit score on new mortgages, and it's such a sharp change. It would be nice to be able to try to understand everything that was happening, but it's sort of like if suddenly the city gets torn up by a flooding river, you don't really have to confirm where the rainstorm was to know that you need to clean up the flood, right?
Do you think, during COVID, there were a lot of things put into place that people that were having issues paying their mortgages were given relief in different forms? And do you think, and just from some things that I've seen, that some of those homeowners took advantage of those situations, and that some banks are still feeling the repercussions from that because there's people that are still in houses that have not been paying their mortgages, and just if and had like it's almost like 9 lives. Like I had a client that I just couldn't even believe it. Like, how are they still in their house and they haven't paid their mortgage in how many years? Like, and I think you have enough of those people that it affects home ownership for the majority because of that.
Yeah, and I think the New York area is probably especially, in all those sorts, tenant protections and even like in the foreclosure crisis after 2008, New York and New Jersey were very slow in sort of working through all that inventory just because of the local rules about that. So yeah, I think that's
Then
probably
COVID hit, so they gave them more time, and then
yeah.
it's like, hey, it's 4 years later. Have you paid your mortgage yet?
Yeah. It's an interesting dilemma. I do think New York and that area is sort of a special case, and probably in a lot of ways is sort of the pendulum's way in the other direction. I do think I feel like the COVID forbearance was on net positive for most of the country. I think I don't think forcing a bunch of people into foreclosure would have helped the macro situation in any way. But yeah, I can understand that the New York area probably has some the pendulum probably is way too far the other direction in some cases. I don't know if it really affects the broader market in terms of like affecting prices or ownership possibilities for other families, but yeah, there are definitely areas of abuse that and also you see these crazy stories in New York City of people taking advantage of tenant protections and squatting in houses, and then then there's a 2 or 3 year backup in the courts to get them out of the house, and yeah, it's
Then people just take it. Yeah, there's a vacant house and they just move in, and some judges have ruled in those squatters' favors, which is just really crazy. You see them in the headlines. And I think the other challenge we've had, a fact and figure that I think is fascinating, that there's more people in Suffolk County than the whole state of Maine, which is amazing. We have a lot of challenges. It's a very diverse county in that we have some of the towns are right on the Nassau border, so are a lot like Nassau County. You have a middle part of the island that's still there's land ripe for development. There's big open tracts still that were farms and or used for industrial purposes. And then you have the East End, which the housing prices are just astronomical. I mean, you can't even, and then you lump in out east with a transportation challenge. And last week we actually did a transportation panel at the law school. We had the county executive there just talking about all the challenges. You have a lot more people living out east now than did previously because people have more flexibility with work. People might retire out there, so you have more of a need for year-round health, education, government, not even talking about the trades. I mean, I don't know if you ever heard of this. There's this thing out there called the trade parade. So all the people that service all the homes out there that are doing, carpentry, electricity, sprinkler systems have to get on the road at 4 o'clock in the morning to be able to get out there because it's a 2-lane road. So
yeah,
it's a massive problem with affordable housing because there's really no apartments out there. There's not really any rental market except for you're talking about your Memorial Day to Labor Day for $50,000 a month. but that's another whole issue. And the governor has tried to, she was trying to push some ADU housing, which I know has been very successful in California, but everybody on Long Island thinks that that will make it like Queens. And you know, I think the challenge also is the South Shore of Long Island, the zoning, the houses are much more closer together. So there's really no room to put in, and there is, but it's a lot tighter. And then you have other parts of the North Shore of Long Island that the houses have a little bit more space, that putting an accessory dwelling unit would not be the biggest problem. So, you know, I'm just curious about I mean, I know that these are issues all around the country, but here, you know, it's very hard for people to find rental housing. And it has been since I got out of college back in 1990. I found an apartment through like the guy who worked at a local pizza place that had a 2-family house. That's how my then, you know, husband to be, and I found a basement apartment after a year. And this was in 1992. So I'm just asking you, I mean, this is something that's still a challenge. And I know, I think all over the country, finding affordable housing for people, not just people that want home ownership, but even for rental, because they can't, you know.
Yeah, actually, you brought up a point that I hadn't really fully thought about before, which is in places like that with the COVID work from home switch and everything, you have places where the housing stock was where there was a lot of seasonal vacancy, and now if people are moving into those houses full time, suddenly you have this great increase in the local need for local amenities, but there's no change in your tax base because the house was already there paying property taxes. And so they're using now that because there are fewer vacancies in the broad sense of the term now, that you have more need for local.
Well, and I think you see that in other areas like Florida used to be a place that a lot of people spend their winters. There are a lot more people that are living there year round. So that's, I think, also changing that area of the country, that you have people, you know, I think it's in different parts of the country that you've seen that. And I think COVID kind of instigated it, but I also think, you know, people that have flexibility to work are moving, like, you know, we've spent time in northern Maine. There's more people moving up there now because it's so unaffordable in other parts of Maine. You know, the whole coast of Maine up to, you know, Arcadia is unaffordable for anybody. So people are moving up further and further. You know, there's people retiring up there, living there year round, and they don't have the services up there. You know, we spent some time up there and there's no first meds. I had to spend 8 hours in an emergency room for something that would be a first med. But you have a lot of other people that live there year round that are having to do those kind of things because there's not the infrastructure to support year round living in some of these areas, which is needed.
Yeah, actually, this gets at a broader point that I talk about a lot in my work. And it goes back again to the mistaken convention about what happened in 2008, is that you know, there's this idea that there'd been overbuilding before 2008, but really we've had decades of underbuilding, and we were really just getting to a sustainable amount of building in 2008. And so like 2005 is really the only time in the last, say, 30 years that rent inflation was actually just almost touching down on to be at the rate of general inflation. That almost all the period of the last 30 years or so, rent inflation has been elevated. So vacancies had sort of ticked up a little bit into the mid 2000s, and people associate that with overbuilding, but actually it was ticking up to what should be like the reason you can see that it was a neutral vacancy rate is because finally rent inflation wasn't excessive for once. Now then vacancies shot up in some places after that because of all the mess that happened, the frictions involved with 2008. And so there was a rise in vacancies that had to do with the bust and everything. That's sort of a whole separate issue. But if you benchmark to those vacancy rates in before 2008, which by the way, the New York area never gets close to those vacancy rates. We're something like 4 or 5 million units short nationwide of empty houses. So if we had excess building above what we're building now, and everyone that moved into those 4 or 5 million new homes, which it would take years for us to build, left their homes and those homes never found a renter or buyer and they sat empty, that would actually be normalization. Like we need forget about new households or, any other sorts of demand. We literally need 4 or 5 million houses just to not use them, to be sort of like having a 4 or 5% unemployment rate. Like you just need,
Yeah.
there's always some
We
slack.
need some vacant housing. Yeah.
And so actually what happens is, like, when, I would say that the demand associated with COVID was actually quite moderate, and it's the supply shortage that makes it seem like it was a big deal, because what we should have had is 4 or 5 million empty houses. And when there was a bit of a bump in demand for housing, they would, then we might have only had 3 million, it would have taken two or 3 million of those empty houses. And then over a course of time, we would have rebuilt the vacant stock. And what's happening now is there's just no give in the system. There actually, a functional housing market actually shouldn't have and doesn't have a short-term supply problem, because there are always, just like you're seeing in Long Island, there's not just like houses for sale and houses for rent, but there's houses that are seasonally used and houses under renovation. There's all sorts in a natural functional housing market. There's all sorts of places on the margin where pretty sizable shifts in demand can just be sort of swallowed up and handled. And we basically taken away all those soft edges, so that now just any slight change in human behavior, just it becomes like a crisis thing, where suddenly prices are volatile and people can't find places and people have to move away from a city they're trying to live in. And it's just we've taken away the slack, and we're just years and years of recovery away from getting that back.
Yeah, and I think there's challenges too. I mean, I know you talked about, older houses, that sometimes people with less income might move into those houses in certain instances. And just for an example, in Maine, you have a lot of really old houses and you have older people living in them, and they can't afford to upkeep them. And those houses just fall into the ground because they can't heat them. They can't winterize them. The weather patterns have changed. There was a hurricane in northern Maine last September, and it decimated and created a lot of water in a lot of houses. And you have coastal areas and moisture wrecks houses. So these houses might have been built, 100 years ago, 50 years ago. They can't withstand this weather, which I know is a problem in other parts of the country. You have increased heat and humidity, and you can't deal with those issues. So these residences become unlivable for people. And that's another cost that are borne, not just the cost of paying a mortgage or a rent, but having to upkeep or renovate or put in new heating systems and some of this, aging infrastructure. Those are all problems.
Yeah.
That's like another equation. Anything to add into everything, right?
Yeah. Yeah, and a little bit of that is sort of the difference between, that's probably mostly a rural phenomenon, right? Like up in Maine, right?
Yeah, but it's a coastal issue. Like I think you see that in other parts of the country, like in Florida, there's a big issue with mold. You have issues with, I have a daughter going to college, so I'm in a lot of these Facebook groups with parents with kids in college. How a lot of these dorms are just not, really prestigious schools, their dorms are not up to handling students being there with rising temperatures. And this is a different housing issue, but it affects people in regular houses too. But when these dorms that were built at a certain time when the weather was different, and they don't have any airflow, you know what I mean? They need air conditioning. Like even in northern Maine, you might not have needed air conditioning at one point, but now it gets hot enough that you need air conditioning. Long Island, I'm sure at some point but everybody needs it. It gets unbearable, the heat, especially with people. And then you have the other thing with heating places during the winter. There's the challenge of that. And I know I met some people in northern Maine that were burning their furniture because they couldn't pay for the oil, in their fireplaces or their wood stoves to keep their places warm. And that's what people, it's different challenges, I think, for different people, and what costs they decide not to spend because maybe there's medical, and people are I think this is another whole conversation. People are living longer with issues and problems that and the reason I bring this up is I have a stepdad with Parkinson's. He moved into a house nearby me from Florida. They couldn't stand the heat in Florida anymore, so they're living in New York now. But the house they moved into is not easy for him to get around it. It's not a brand new construction with everything's flat. So we have to modify. There's steps coming up from the driveway to the house. The shower is a tub. Like you have an aging population that can't access old homes that need to be modified for them so they can, you can't have an aid if you don't have these things set up for some people. That's another issue. I think the aging population affects housing stock as well, So I'm just thinking of all these housing issues. But they're real issues that a lot of people are facing because we do have a lot of older people that are able to live a lot longer because of healthcare advances, and people want to stay in their homes. They don't want to be in facilities that they don't have to be. And it's modification of older homes. You can't be on a second floor. You need to be all one level. Like this might not have been an issue 100 years ago.
Yeah.
So what do you think I mean, I sorry to take it away from your conversation, but what do you think are the opportunities going forward? Like what could help correct some of these issues that we're seeing?
It's sort of a mixture of things that are politically impossible but should be easy, and things that aren't going to be easy. So like to me, I'm sort of an outlier here in terms of I think the mortgage crackdown in 2008 has actually done more damage to our housing market than all of the local land use debates and conflicts combined. And you can see it in the effect it's had on the stock of housing. And that's technically very easy, because I would say just go back to have the GSEs and the FHA go back to any standards they used for lending from any time before 2008, and everything will be fine. Now, that's not on anybody's radar, and the reaction to that is always going to be a knee-jerk reaction about what happened with the subprime market in 2000, before 2008. So I don't have any hope of that.
But I agree with you, because most rents, I mean, we had a new complex go up by us in Huntington Station. There were studios that were very small, going for $3,000 a month, and you can get a mortgage for less than that. So I think if people are paying that in rents, it'd be much better for them to be investing that money in home ownership with a mortgage. And maybe their credit's not the best, but they're somehow paying rents that are in excess of what a mortgage payment is going to be.
Exactly. That's actually an excellent point. And in fact, if you go to Zillow, click randomly anywhere in the country. Now, there's some places where there just aren't any houses for less than $300,000, but click on any house in any city across the country that sells for less than $300,000. The mortgage payment to buy that house is almost certainly going to be substantially lower than the rental value of that house.
Yeah,
exactly.
Especially if they could have an accessory apartment in it to help. My first house that I ever owned had an accessory apartment, and that's how I afforded it. And I think it's a really important way for people to help get to have home ownership, is to have the availability to use their home to generate some income for them to own that home.
Yep. And it's really sort of surprising that there's not a groundswell of, there are millions of families that live in homes, that are renting homes that they could own and spend less money on. And why hasn't there been a groundswell of complaints from those families saying, why aren't we able to get mortgages?
Because I think those people are just barely making it, and they can't even have the energy to sound their voice. They're just trying to get through each day and can't. They don't have the bandwidth. They don't. Those are the most vulnerable people out there that are wondering how they're going to pay for their groceries tomorrow, how they're going to pay for their electric bill. A health issue comes up and can put everything in disarray, and they don't have the time or the energy to have that voice to really band together to do something like that. But I think you're right.
Yeah. So that, for me, that's number one. Is I wish we could fix the financing side of it, and I wish there was a better understanding of it. Now, on the other side, on the land use side, I think that's much more difficult. Now, obviously, there's the YIMBY movement, and there's a lot of momentum sort of pushing the other way on that. And I do think we're just, I would say there's offense and defense, and the defense part of it is we have to make sure that we don't ban the new build-to-rent single-family home market, because, as I said, because that market has never really existed before. It's people aren't going to recognize it as being so important. But the thing is, because every other form of new housing on the margin is illegal, it really is the only option we have now for, I think we need something like 15 or 20 million new housing units to get back to a normal market. So over the next few, like that has suddenly sort of come up to about 100,000 new, like over the last year, about 100,000 new build to rent single family homes have been built. I think that's going to very quickly go to 2, 3, 4, 500,000 units. It's going to freak
Where do
everybody.
you see those most? I mean, I don't see that a lot in New York, in our area, build to rent. Where is that growing most in the country?
Yeah. Yeah, well, so New York area's problem is that there's not enough ability to build any houses,
Anywhere.
even before the mortgage thing. So
Yeah.
yeah, these basically there were large swaths of the country that they have the same land use problems that New York City and Boston and San Francisco and LA have. And for decades, there was a Band-Aid over that problem because you could build new single family homes in the exurbs of all those Sunbelt cities. And so they could sort of ignore that they were slowly doing the same thing that New York and LA have done, where the existing parts of the city are sort of frozen in amber and aren't allowed to change like they always have in cities. And so they had a Band-Aid over that, and they could build new single family homes on the exurbs. And then when we took away the buyer's market for those homes, it was like ripping that Band-Aid off. And so now every city for the last 15 years has been in a condition where they now suddenly had this huge gap in their housing supply, and they couldn't fill it with multi-family building or infill building because they'd made that illegal and sort of could get away with that for decades up till then. So yeah, so basically those are the markets where, pushing the prices down really, a lot of those places are still building less than half as many houses each year as they had, just traditionally been doing before 2008. And we're finally back up to sort of a point where the build to rent landlord buyers can start they've been poaching the discounted existing homes for 15 years, and finally now those are expensive enough they can start building new homes. So yeah, that market is mostly it's Phoenix and Atlanta, places like that where the build to rent, where the gap exists, where the build to fill it. And so because that market has never really existed, it seems hard to argue that it could be that important. But the thing is, I've sort of been staking my reputation on this forecast that I think it's going to very soon be hundreds of thousands of units a year. And I think that's going to, there's already a backlash against it now at 100,000, and that backlash is going to explode. And there's already, rhetoric in the presidential campaigns about, going after these corporate landlords and bills that have been, introduced. We haven't been passed to ban certain kinds of corporate ownership. So I'm really afraid of that, because the thing is that could at least stop what, we just have, in Phoenix, you can't drive around town without seeing homeless people in the parks. And that just wasn't something that you saw to any extent before, more than 10 years ago or so. At least we can stop seeing that get worse if the build to rent market can.
Well, I think it's also a need for more social services and mental health, because that's a big component of the homeless.
Yeah,
I mean, in cities, that's a big issue. You have a lot of people that are homeless because they cannot avail themselves. They need social service intervention because there's mental health challenges for a lot of homeless people. But that's another whole.
Although I think it's actually important to push back against that, because I think what happens is the 0.5% most vulnerable portion of your population might be homeless in a regular market.
Yeah.
And when you don't have enough housing, and well, maybe it's probably 0.1% normally. And if you don't have enough housing and that goes to 0.5%, it's not going to be the accountants and the nurses and the school teachers that are going to be homeless. It's just going to be the sort of the next 0.4% of marginal people that wouldn't be homeless if they had a buddy that had a couch they could sleep on, or
exactly. They're just vulnerable, the vulnerable population. Yep.
Yeah, so I think, and in fact, I think there's a similar thing that happens at the other end of it when we have like speculative bubbles, and so like people tend to look at 2005, and it's easy to intuit that, oh, it's because all these people were buying more house than they needed and they couldn't afford it. And the thing is, in the distribution of decisions people are making in their lives, there's always drug addicts and there's always people overbuying, right? And those things only become noticeable and sort of crisis inducing when the underlying conditions become become unstable. So so in a normal housing market with enough supply, people that might be overbuilding wouldn't have actually triggered a financial crisis because because that was the reason that prices went crazy and everything got. And again, people that are addicted to drugs and have mental health issues, a lot of them would have some form of housing if we didn't have the housing problem, right? So
Yeah.
I think in a lot of ways, the supply shortage makes all these other
Magnifies them. Yeah.
exactly,
Definitely.
and so it's easy to sort of blame them on the factor itself, right? When the scale of it is really fully being created by the housing shortage, right?
Yeah. Yeah.
But anyway, I think that can stop getting worse if we let this one remaining part of the market that can grow. And if we ban that, then that's going to keep getting worse, and we're going to have more families every year. Rent inflation is going to continue to be at unprecedented high levels. And so we have to make sure not to make it worse. And then there's just a number of steps going backwards that get harder and harder as you get deeper into the land use policy of just, making ADUs legal, making a larger percentage of cities' land being available for apartment buildings and all these things. And, eventually that gets into issues. City building is a complicated and difficult thing, and it would be easy to solve the housing cost problem by just getting rid of all of that and making every other conflict subservient to the supply issue, but that's not going to happen politically. And so that's a long, deep debate about how to grow cities again. But that's a necessary component of sort of getting back to normal. So yeah, those are sort of the categories I would see in terms of policy issues.
Are you starting your next book? And what will that be?
Well, I mostly do short form. I write at my Substack.
I know, yeah. But do you have anything in your head germinating for another book?
I don't think so. I think the books were necessary because it's sort of this big, it's sort of
To go through all that, yeah.
I sort of felt like it was a Ptolemaic world, and I needed to put this Copernican, counter
Set everybody straight, and then use your Substack to get your messaging out.
Yeah, it had to sort of be laid out in a big giant piece.
Yeah.
But now once that's there, there's just a lot of details on the edges that I can work on.
Have you written any like comparative stuff, like comparing the United States with Europe or Canada?
A little bit. I get a little bit into international comparisons in Shut Out. It's a little bit, there's so many local, issues that you really have to understand well to really do a comparative study that that's reliable. And so I haven't put in the effort to like really be an expert on any foreign markets. But there's so many differences between the U.S. cities that you could easily spend a lifetime on those.
I think one of the most common counter argument I find myself having to deal with is, well, what about Canada? Because Canadian cities certainly aren't as extreme in living housing as U.S. cities, and yet they have some very similar problems.
Yeah. I mean, I think the United States is a little bit has the worst and also better options for housing than a lot of those other countries, in that I think that Toronto and Vancouver are probably sort of similar to like a Seattle or Washington, D.C., which I have a very distinct group of cities: New York, Boston, LA, San Francisco, San Diego. And if you dig deep enough, you get to Honolulu. That have a very distinct, patterns of costs, of population growth, of migration, of population or of income distribution. And I call them the closed access cities. They're cities that have locked out, that have made it impossible for aspirational families to move in and grow the city. And so the Seattles and the Washington DCs, are sort of they could be better, but they're, in general, they still can have positive net domestic migration when the local market calls for it. And I think that's sort of where Toronto and Vancouver are. I don't think they're as bad as New York and Los Angeles. But what muddies the issue is we destroyed our housing market in 2008 and those other countries didn't. And so, but that's treated as normalization by everyone, including the Canadians and Australians, which is sort of weird because they had the same market and it didn't happen to them. And so, our market basically looks like the reason they're more expensive than us is because they didn't take 20 million families out of the housing market. And so in every, category you look at, if you just sort of take away the collapse of whatever it is you're measuring in 2008, the US looks like them. And so since then, we took away 2 million construction jobs, we took away 20 million mortgage borrowers, and so we just made this permanent scar on our economy that comes across in lower prices and lower employment and everything compared to them. And so they're sort of like our market, but not quite as bad as the worst cities we have, but also maybe not as many. They don't have as many Austins and Dallases and Houstons as an alternative also. And so, there's probably not as many opportunities to move to Regina or Saskatchewan as there are to move to Texas. And so probably, even though they're more like Vancouver and Toronto are more like a Seattle, the lack of maybe as many options elsewhere might make the pressures worse. Sort of like the pressures have been worse in the United States when we've lowered the growth of all those cities since 2008 with mortgage access. And so now all those other cities in the United States, before 2008, those cities reacted to our coastal cities out migration by building houses. Since 2008, the reaction has been rents just rise everywhere, right? And so the margin now is, can I get a high enough wage in Dallas to pay the rents that are now excessive in Dallas, right? Whereas before you could move to Dallas with a lower wage because the rents weren't going to go up on you. So you can definitely see the scars that we've placed in the American economy, just like comparing like construction employment in the United States over the last 20 years to construction employment in Australia and Canada. Like if there was an oversupply problem, why did their construction employment just keep going up in a straight exponential growth, and ours just permanently took a 2 million job divot? Why was that just us?
Very challenging and not an easy fix.
Yeah.
And I think the cost of housing, the cost of housing is just really, I know young people in New York, they rent rooms like in outer suburbs because they can't afford apartments because the rents are so high. And it's just a very hard problem to fix, I think, because it's become such a challenge on so many levels, to correct that.
Yeah, actually, that brings up another really interesting facet of this, is that you see a lot of pushback among the skeptics that say, well, home ownership, rates have sort of bottomed out, so the mortgage situation can't be that bad because home ownership rates have stabilized. Part of that is just demographics, that there's a bunch of baby boomers in their 60s and 70s and 80s that just always have 80% plus ownership rates. And even if we've pushed back home ownership, eventually it's sort of, so first you have to sort of demographically adjust to really see, you have to look within age groups to see how home ownership is changing. But the other issue is like those people you're talking about that are renting a room, or like three 20-something investment bankers that are working in Manhattan are sharing a 2-bedroom apartment in Queens or whatever. The thing that's happened since we cracked down on mortgages has been that people aren't, people are teaming up. Kids are still living with their parents. They're not forming households. So those three young investment bankers sharing an apartment, they count as one household. So if one of them could buy a house and move out into a new house, in the home ownership rate, that increases the denominator and the numerator, because they're creating the fact that they could get a mortgage is making another household. And so the home ownership rate is actually it's got a bias in it now. It's become non-informative because we've tightened up housing in so many ways now that we're actually the sort of equilibrium reaction to it is that people aren't forming households. So we're actually affecting the denominator of that home ownership rate. And in a way, like, the fact that the home ownership rate has bottomed out is actually a sign of how desperate the market has gotten. It's not actually a sign that it's not so bad. It's a sign that we're making trade-offs on the margin that are peculiar historically. Now, of course, in general, we have smaller households, partly because we're wealthier. A lot of it is just we have fewer children. So if you look at adults per household, again, it's a thing where if you have to look closely at that data to realize, like, there was a long-term sort of slow decline in adults per household, very, very slow decline. It's pretty stable over time. And then in 2008, that reverses and now has trended up, it's trended up, that there's more adults per household than there were before the mortgage crackdown. And that's another way to sort of say, okay, what if that 80-year trend had continued? How many units would it take to house all those adults following long-term trends? And again, that gets you up into above 10 million units it would take to revert to our long-term trend of adults per household.
A lot of challenges. This is what keeps you up late at night, right? And we'll see with the election tomorrow what might change or not change.
Yeah.
Or probably not change.
I mean, I'm a little bit, at least Harris has, gives a lot of lip service to the supply issue. Now, I wish she would get the anti-corporate stuff out of her plank, because that's only going to be bad. But
well, it's difficult to make everybody happy, you know that.
Yeah, exactly. Yeah, and actually, that part is I'm sure the more popular part of the policy plank, unfortunately. But
it's very challenging. I mean, I'm fortunate in my role as chair of the Suffolk County Planning Commission. I don't have an elected position, and we're more of an advisory committee than anything else. And doing work with the Touro Land Use Institute, we're able to bring all types of people to come and speak before us, which are great. And what was really great last week is that we had our new county executive, who's a Republican, who, really harped on how, local issues are not Democrat, Republican. It's what's best for the people. And I mean, even on a national level, that should be the same message as well. Everybody needs housing. People need, a place to live. They need to be able to get around their areas without challenges. And on Long Island, one of our biggest challenges is clean water. And we have a proposition up tomorrow on increasing the sales tax. And a lot of our sales tax comes from people that visit us. I think it was 13 billion last year, and it's an eighth of a penny to go towards this fund, because 75% of Suffolk County is on septic. Nassau County is 75% sewered. So it happened because in the 70s, there was some corruption among some elected officials that prevented Suffolk County from being sewered when it should have been back then. And we also have the distinction of being on top of our aquifer. So that's a big challenge. And clean water, doesn't matter what party you're in, you need clean water, because you don't want bad water. And I'm sure where you are, you just want water.
Yeah. Yeah.
So, I mean, we during this political season, there's so much, divisiveness between different parties, but it's all, everybody just wants to live their life and be happy and get through their day, and all this other stuff is just kind of silly. So, I mean, I think housing is an issue that crosses all party lines. It's something that is needed and necessary. And your work is really interesting. It made me think of things differently. I owned a home and sold a home around that time of my life, and was able to sell a house right before the whole thing crashed, which was a good thing for me. But you know, it's interesting to see how values come and go. And you know, I really think that thinking of different types of housing stock is really important. Especially, you know, people wanting to live in different kinds of communities is important. You know, a single family home is not always the best thing for some people. Some people need to live in rental housing or apartments or, you know, something else. But I think it's important to have all those opportunities available for people.
Yeah. Yeah. And Phoenix is a fun example of that issue because, you know, a lot of these local land use rules, you know, basically come from at a very local level, not wanting to be sort of the part of town that starts declining in relative socioeconomic status, right?
Yeah.
And so, you know, a lot of it is keeping the pores out, basically. And what's interesting in Phoenix is we have a really large retirement community, and nobody's scared of them. And
Yeah.
so even if they're not particularly wealthy, nobody's scared of them. And so what's fascinating when you watch the local land use debates is a lot of times they can be, you know, one of the ways that it'll get resolved is, well, you know, we wanted to build this form of housing this way because there's a lot of demand for it. But we promise only people over 55 can move into them, and then it gets approved. And so you know, you get all these, we have all these.
And that happens in New York too, because the problem we have here are the school districts who have a much louder voice than they should. And even though most of our property taxes go to the schools, and they say they don't want more school kids, but you know what? There's not that many school kids anymore, and that's a problem. And one of my first planning commission meetings was for a project that was to build some rental housing near our train station. And so many people were like, there's going to be too many kids. Well, you know what? You need kids in your schools. And that should not be an argument why you don't build rental housing. You have people that don't want to live in a house. You have divorced parents. One of the spouses they both can't own a house. I mean, it's the economics don't work that way. You know, young people, you want young people to stay around, you need to have rental housing. Old people, they can't afford the taxes. Like there's so many people that have that need that don't necessarily need to buy a house. And it's so interesting how you say it, you know, that old people are okay, but here it's because they don't want school kids.
Yeah. And so, you know, we have all these, you know, big sort of grand like retirement communities that are like basically sort of have most of the elements of like a 15-minute city. They all sort of drive around their little neighborhood in golf carts, and they have lots of activities, you know, that they can walk to. And it literally is illegal to build that if you let anybody under 55. The cities literally just won't let you put in that neighborhood.
I think good communities are diverse communities, and you need people of every socioeconomic to make them successful, because that, you know, that's the way it works. That's my belief. I think you need, you know, all types to make things successful, because you don't want all of one, because it just is not, I don't know. That's just my own.
Well, and that of course is what makes all those debates, you know, this is going to be a decades-long debate to get our cities back to where they let that sort of stuff happen. Because
it's tough. It's very tough.
Yeah,
it really is. Anything else from you, Michael? We've had a great conversation.
It's 5:18, so I feel like
we took a lot of your time, Kevin, but I appreciate it. Kevin,
Yeah.
where are you from originally?
Originally Indiana, rural Indiana.
Okay.
So I'm in the Phoenix area now, but yeah.
Very different.
Yeah.
But it gives you a good exposure to all different kinds of housing issues by being from those two different areas.
Yeah, that's true. And it's sort of fun. I never really minded the winters, and it's, you know, I always joke that, you know, there's three basically Arizona is in thirds. A third of them at this point are native, that like they were born here and raised here. A third of them are Californians that they're like, you know, we love California, we just couldn't afford it anymore.
Yeah.
And a third of them are from like Milwaukee, and they're like, you know, kill me before I live through another winter.
Exactly.
We sort of ended here by accident, and I'd be happy to move back to the winters, but
is it too hot for you? You know, I've spent some time in Florida, and it gets a little too hot for me sometimes.
Yeah, I mean, I basically just don't go outside for 3 months. Although I used to work in contracting and would have to go out and you know, you know, you sort of get used to it when you're
definitely. Well, it was a pleasure to meet you, and good luck, and I'll take a look at your Substack and be informed and educated about issues that I don't know so much about. And thank you, Michael, for bringing Kevin into my radar.
Great, great.
Yeah, I really appreciate you guys
Yeah, I
having me.
hope you don't mind that we kept you for so long.
He loves talking
Oh,
about housing. He loves it.
exactly. I mean,
I
this is,
know. I
yeah,
can tell.
this is my, you know, basically 10 years ago, I started seeing things and they were just too interesting to stop looking at. And so I just became this guy now, and I would talk to you for another 2 hours if you wanted to. So.
Well, we appreciate it. My poor dog, though, would not be happy because this whole time change is really affecting him greatly. He just was over here like, wait a minute, it's dark
Yeah.
and you haven't fed me, and my body thinks it's 6:20, so I don't know what's going on here. So
Yeah.
and it's worse than a child because they don't talk back to you. He just stormed away. He was so mad at me. So
Yeah.
anyway.
Don't do daylight savings here because the sun couldn't go down fast enough.
You'd be happy. You're like, great. Yeah. Anyway, it was great. It was a pleasure meeting you. Take care. Good luck with everything.
Yeah, thanks.
Yeah.
You guys too.
All right. Bye-bye.
Okay, bye. Thanks very much.